I want to get to our next guest. He sees gold going even higher than $1,500. Thomas Winmill is a portfolio manager of the Midas fund. His fund is fully invested in mining stocks, primarily gold mining shares, and the fund has gained 131% and change over the past year and now ranks in the top 4% of global multi-cap funds for the month and the top 12% for the year to date. It's outperformed other precious metals funds for the past month, quarter, and year. If that's not evidence enough that we should have him on, maybe you need to be on a different channel here. Thomas, let me ask you quickly about gold today. I mean, we are seeing it rise up above $1,100. Do you get the feeling it's going too far, too fast? I mean, would we see a correction at some point before we see a continued climb?
Well, I think there is going to be a correction, Matt. No question. I'd have to look at interest rates. Where interest rates go, that often determines the price of gold because it has such a big effect on the dollar. A little bit higher rates in here. I think gold will decline as the dollar comes back. Will the Fed raise the target rate? I don't think it's going to do so anytime soon. So I think gold's continuing shuffle up towards about the $1,200 level, I think, is intact.
Tom, so wait, you said maybe a little bit of a correction here. We're trading at 11.02 today. So how much of a correction? What kind of level could we go down to?
Well, you tell me where interest rates are going to go. I'll tell you where gold's going to go. I'd say if we go up to, say, a 2-3% level, and we can see gold going back down under $1,000 an ounce easily.
Well, listen, we were just talking with Jeremy Siegel. He's a smart guy. He's been right on equities so far this year. He thinks that the economy is going to recover more quickly than most other economists and that the Fed will be forced to raise rates in the first half. Do you share those optimistic views?
Well, I don't think the Fed is going to be forced to raise rates necessarily. I think his projection of a 4% GDP number is a little bit higher than we have at Midas right now. We're looking at maybe 2.5–3% annualized. So I don't share that view, but it is possible. What we're looking for longer term, though, is a continuation of the fiscal imbalances in the U.S., and we think that's going to be the biggest driver of the gold price for the long term. Yesterday or over the weekend, we saw the announcement of the $1 trillion addition to the budget because of the health care proposal. I think that is the kind of thing that unnerves people when we already have a real problem with finances in Washington.
Do you need, though, Thomas, inflation? I mean, Siegel says that we're going to see economic growth rather than inflation as the reason for the Fed to raise rates. If that's the scenario, does it concern you, or is inflation not a necessary fear for the price of gold?
Well, inflation is, in my view, another way for saying the debasement of the dollar. And it's almost automatically that if you have more dollars out there, the same amount of wealth in terms of GDP, you're going to have to use more dollars to buy the same stuff, such as gold. So right now we're looking at, according to the Office of Management and Budget, about a $10 trillion overspend in the next 10 years. We have about $8.5 trillion of money supply now. So we're looking at a doubling of the money supply. Probably a small amount of GDP growth, and that is going to drive the dollar down in its purchasing power, and that's where gold is going to have a positive role for U.S. investors.
Tom, talk to me, though, a little bit about the gold stocks trade, the Philly Gold and Silver Index in particularly. Is it getting ahead of the market? And I bring that up because it's doubled in the past year. It's up about 46% so far this year. Gold, though, is up about 25% year to date. So there is some outperformance here on the equity side of things. 20 seconds here. Does that make sense?
Well, I think the gold stocks are just under what I consider a range of fair valuation. There's still a little bit of life left in them. The interesting thing is that their costs have come down. Labor has come down worldwide. Oil, other costs of producing gold has come down. So a lot of the margin expansion we're going to be seeing in the really good gold mining names that we try to have in the Midas Fund.
All right, we've got to run. Hey, Tom, thank you so much. Tom Winmill, portfolio manager of the Midas Fund.